Hello, I'm Robert and welcome to my channel where I discuss everything automated algorithmic trading or simply algo trading. Today we are going to pick up where we left off in the last video with the continued discussion of using artificial intelligence or AI to help optimize how we handle our open orders. This is a live market we are looking at for the Euro USD, but it really doesn't matter what market you're working with, because from the standpoint of the technique we are using, all that matters is how we look at our open orders. So as we can see the current range of the market, from yellow line to yellow line. So up here to down here on the screen. The yellow lines are the range that the market is moving in. This is an important indicator for us because we can see realistically just how well the market is going to stay within a trend. If the market goes above the trend, then it can cause losses or shift the dynamic of our trading approach, which is fine as long as you take that into account. Now, I use multiple trading positions because it simply works better for my risk assessment and for my ability to help protect my account. So over here on the side are my current list of trades. Now this account isn't impressive. It's not a lot of money in it. And multiple positions means that my account spreads out what I do have into a very small amount per position. That is, I can take advantage of quick opportunities while still having a long-term plan. It's part of my risk assessment that works well. But it means that I have to have a way to manage all of these orders. And that really is the biggest problem with this technique. Because if you trade a large number of orders on a large number of accounts, whether it be a real account or a demo account, it's going to take a significant amount of time to check every single order. So going through every single order is roughly 1 minute in time per 100 orders. Now that does fluctuate based upon the API calls to the broker or the exchange, and that can in fact take longer under more extreme cases. But through the use of artificial intelligence and actually examining information and correlating it to what we see as humans, I've been able to optimize this process to look only at 2 orders. The first order in the list, or the one closest to the take profit, up here. And the last order in the list, or the lowest to a stop loss, down here. Now this market is in a short direction. If you're in a long trading direction, then it's going to be just the opposite. The bottom order is going to be your take profit, and the top order is going to be your stop loss. It sounds weird, but when you look at the way the markets work, it makes sense. And this is why a demo account is absolutely critical. But using demo accounts with this kind of a process where you are checking each and every order over and over has a consequence. For example, as I talked about in the last video, with just 200 orders, going through each and every one of them took 3 minutes. Imagine having 1,000 orders spread across 10 or 15 accounts. How much longer could that possibly take? And what happens if one of your orders is in profit, but the program is scanning other orders from different accounts? You're going to miss that opportunity. Now, it may still be there when the cycle completes and goes back to the beginning, or it may not, and you've lost it. And that's the problem with this kind of a technique. Efficiency and thoroughness are somewhat opposite ends of the spectrum. For example, let's take a pendulum. Over here on the left-hand side would be efficiency, and on the right-hand side would be thoroughness. Efficiency means not going through and checking every single order, but only checking those orders you need to check. Thoroughness means checking every single order no matter what. And that's the problem. It's a balancing act in terms of your risk mitigation. What I have found in this process and in going through this process, by looking at the way the human brain works in terms of looking at the chart, by examining how we actually think and make decisions, and in trying to take that process into the program, we can see by looking at this chart that there is a situation here to be aware of. Our brains can register that the market had an uptrend and it now is going downwards. The computer isn't as astute or able to make that evaluation. And the problem with using computers is they can't predict the future any more than you can, or I, or anyone else. Now, there are tools we can use to make decisions, and those tools may or may not be correct. For example, looking at this situation, this could have easily had gone downwards. It could have easily have kept losing in value. I've just added the order book overlay to this account so you can see the interplay going on between buys and sells. So as we look at the order book with the red and green backgrounds, this helps us make more decisions. But again, it's not a prediction of the future. It only tells us where the market is at right now and how we can use this information to process our trades. The realization of using artificial intelligence to optimize our trading needs to be done properly and consistently. So as we progress forward and we begin moving into the more deeper elements of that technique, by looking at the highest and lowest within the price spectrum, that is the closest orders to actually hitting a take profit or a stop loss, we are optimizing our availability of functionality, but we are ignoring potentially a lot of information. So there are always those trade-offs. That scale always has to be balanced appropriate to your risk assessment. So let's get into the VPS now and actually look at an example of just how well or how different these two techniques actually work. We are now looking at the traditional version of Oliver Twist. I restarted this process over an hour ago to process 1,355 orders. It has not completed. Now, roughly speaking, it takes 3 minutes for 200 orders. So let's see if I can do this with reading and make my scribble decent. So 3 minutes, 200 orders. That equals roughly 1 minute and 11 seconds per order. So, can't spell this morning. So 1 minute and 11 seconds per order. Now at 1,355 orders, that's going to take us over 24 hours to actually complete this entire sweep. Even though this is thorough, it's unacceptable when you have 11 different accounts. This technique works well when you have a very small number of accounts with very limited number of positions. But when you scale it and you start climbing drastically, this technique fails quickly. And that really is the biggest problem that algorithmic trading represents when you're trying to determine how to actually build a successful system. You could have perfectly working code that does absolutely wonderful. But if you lose time in API calls, it's going to hurt the overall progress of the program. This is the prototype I have been building. And this prototype has been using the AI optimized technique of the highest and lowest order, being able to determine take profit and stop loss appropriately. Now I am using the same exact process of 5 sub-processes. So I've kept this directly comparable to the original version to ensure that the timing correlates appropriately with exactly what I am analyzing. For the purposes of this particular example, I have broken down each account based upon the number of orders. As we can see here within this block, we can see the Promisa account Euro USD with 24 trades, a Kraken account on Mimic for ADA with 11 trades, a Kraken account for LTC. And we can also see how long each pair actually takes for processing versus looking at the way the traditional or previous versions ran. And for the purposes of an extreme example, and I emphasize extreme, we have 769 orders. Now this is critical to understand because this is what is going to kill a linear, thorough process of checking every single order. So in 769 orders, it processed the entire list in 0.03 seconds. This one account has a horribly slow API, but because I'm only checking 2 orders versus 700 orders, the efficiency has drastically improved. It's improved to the point that for the regular system to not have even made one complete sweep of trades, the optimized system has made at least 60 complete sweeps for the same amount of time side by side. And we can see for the completion process where I have actually tested exactly how long it takes to track 1,350 plus orders with the optimized technique, going through every single asset that I am testing. Now the thing of it is, in both cases, that is the previous version of Oliver Twist and this new prototype, one of these accounts is real money, which means waiting 24 hours for it to cycle and verify whether or not I have a profit is unacceptable. If you followed this channel for any amount of time, you'll know that the Cherry Blossom account is my real money account. And in this case, it took 3 seconds to process 161 orders by only looking at the highest and the lowest. So instead of waiting 24 hours to determine profitability using the traditional method under an extreme test case, I am actually going to be checking once every 1 minute and 6 seconds. Let's restart this process and see it in operation. Now it's picked up new orders to be added into the system, and we can see that it is beginning to run in parallel each of the different accounts that I am trading. And we can see how that plays out in real time, in a real market. That is the critical part. This is a real market. I have real money on the line. So I can't wait 24 hours per order to find out if I've made money. I need a way to process all of my orders as quick as possible, but still a way to be able to aggressively go out of my way to test different techniques. That is absolutely critical. Okay, let's pause the program again, and let's look at how this market sweep worked. 1 minute, 7 seconds in real time for processing 1,350 different orders. And if we go back to the other process, it's still on the very first set. So if you only have a small number of orders, going order by order works absolutely wonderful. And it's a thorough way of capturing all of the tiny profits as quickly as possible. But as you scale and develop your trading techniques, you need to think about the problem in a way that optimizes how you deal with large numbers of trades if you use a multi-positional technique to leverage risk versus reward and take advantage of the ability to help mitigate any potential losses. Let's restart this and see how it handles and continues to evolve over a few cycles. We can see each account running one by one. 24 orders at 3 seconds, 11 orders at 8 seconds, 105 orders at 11 seconds, 42 orders at 10 seconds, 161 orders at 3 seconds. Keeping in mind that APIs have rate limits, those are going to be your worst case situations. So if you are making 105 API calls versus 2 API calls, it's going to drastically and significantly hurt the amount of time you spend processing. And in the case of TRX having 768 orders, 20 milliseconds, or even 1,000 milliseconds, or 200 milliseconds, depending upon what you are allowed with your own account, is going to devastate you in terms of actual trading. So having the ability to process 768 orders in 0.02 seconds is absolutely game-changing. It's a way of looking at the market such that you can capture and capitalize on quick movements by only evaluating the information you really need. Overall, 1 minute, 8 seconds to scan 11 complete assets. So you can see that the average is fairly consistent time over time. And it doesn't necessarily grow and fluctuate in an aggressive way the way the thorough approach does. The thorough approach causes time to escalate drastically as orders are added to the system. And we are almost an hour into this. And correction, almost 2 hours into this. And yet we still have not gone anywhere close to what we have done for the modern high-low or the optimized high-low evaluations. So as we wrap this up and really begin looking at the important parts of taking and scanning how we look at our data, we can see that taking the time to really think about what we are looking for in our data is critical. We can see that it's necessary to optimize our approach in a very significant way. As we wrap this video up, finishing with looking at the live market, we need to look at the market intelligently. If you only trade a few positions at a time, then you don't need to worry about being so optimized in your approach. But if you do trade the way I do, with a large number of positions, then you need to have the computer go through the same steps as the human mind and focus on the important parts of your trading. That is, the orders that are closest to taking a profit and the orders that are closest to taking a loss. And by focusing only on those areas, we gain an incredible amount of efficiency. Artificial intelligence is not a magic black box, but a tool to help you see opportunities. Let me know how you use artificial intelligence in your trading, or if you do. Share your thoughts, leave a comment below. If you like this video, please give it a thumbs up. Please help me grow this channel. If you're not subscribed, please subscribe. I will leave a link below in the description for the Jackrabbit Relay repository that contains the Oliver Twist program. This is an open source project, so your help in keeping it alive is very crucial. Thank you for watching, and until next time.